Oil crossed $90 a barrel to kick off the new week, rattling currency markets and putting commodities on watch. And that sets the stage for everything on today's radar. Coming up, a full read on the euro, the pound, the Aussie, and gold, plus a sweep across Forex pairs and index markets. There are high-impact inflation prints landing today that traders in the Canadian dollar and New Zealand dollar space will not want to miss. Stay with us. The full symbol-by-symbol analysis is straight ahead. Brent crude surged past $90 a barrel as U.S.-Iran tensions escalated sharply over the weekend, with reports of tankers struck near the Strait of Hormuz rattling energy and currency markets at the Asian Open. The dollar steadied through Asian trade while regional currencies came under pressure, with the Indian rupee among the hardest hit as oil's rally stoked import cost concerns. South Korean won was a notable outperformer, supported by domestic reform optimism even as broader Asian foreign exchange sentiment turned cautious. Gold found a degree of steadiness as investors balanced the Federal Reserve's rate outlook against the flare-up in Middle East risk. The ones to watch on the calendar today are Canadian CPI and New Zealand CPI. The euro-Canadian dollar pair has been trending with strong bearish momentum, and that structure keeps the path of least resistance pointed toward lower levels. Recent price action has shown a consistent pattern of lower highs, suggesting sellers remain in control while this trend holds. The market looks more likely to continue probing lower levels unless the structure breaks decisively to the upside. New Zealand dollar-Canadian dollar has been building strong bullish momentum, with the trend firmly tilted toward higher levels. The pair has been carving out a pattern of higher lows, which keeps the broader structure constructive and the probable path skewed toward further extension higher. As long as the trend structure holds, the market leans toward continuing to push into higher territory. The China 50 index is trending with strong bearish conviction, and the weight of recent price action keeps the probable path directed toward lower levels. Momentum has remained on the downside, with the index continuing to register lower structure across recent sessions. The trend keeps the market biased toward testing lower levels while this framework remains intact. Gold has been trading with a bearish lean, and despite the geopolitical backdrop providing some steadiness, the broader trend structure still points toward lower levels. Price action has struggled to sustain any meaningful recovery, keeping the path of least resistance tilted downward. The trend remains bearish, and the market looks more likely to press toward lower levels while that structure persists. Pound dollar is trending with bullish momentum, and the recent price action has been consistent with a market that leans toward higher levels. The pair has been holding higher lows, reinforcing the structure and keeping the probable path tilted upward. While the trend holds, the market looks more likely to extend toward higher levels from current structure. Dollar-yen is trending bullish, with momentum continuing to favor higher levels as the pair builds on recent structure. The price action has been consistent with a market leaning toward further extension to the upside, supported by the broader bullish framework. As long as the trend holds, the path of least resistance remains toward higher levels. New Zealand dollar. US dollar is in a bullish trend, with price action reflecting a market that continues to lean toward higher levels. The pair has been building a constructive structure of higher lows, which supports the ongoing push upward. The trend keeps the market tilted toward further gains into higher levels while the structure remains intact. Euro dollar is showing a mild bullish lean, with the trend tilted toward higher levels, although momentum is more measured compared to stronger trending pairs. The price action suggests the market is gradually working its way toward higher territory, though the pace of progress has been modest. The trend remains constructive, and the probable path favors higher levels, while this mild, bullish structure holds. Aussie dollar is in a nuanced position. The trend is mildly bearish in character, yet the probable path leans toward higher levels, reflecting a market that may be in the early stages of a structural shift rather than clear directional conviction. Price action has been tentative, and the conflict between the mild bearish trend and the upward probable path suggests the market is at an important juncture. The lean is toward higher levels, but this remains a market that warrants close watching as the structure develops. That wraps the ForexBullion morning brief for Monday, the 20th of July. Keep the Canadian and New Zealand inflation prints on your radar as the session develops. And hit subscribe so the next edition lands the moment it goes live. This is general market information for educational purposes only, not financial advice.